Julian Emanuel of BTIG says, quote, "It is no exaggeration to say that Wednesday could be the most important day for markets in 2021. Julian, it's usually journalists that try and sell stories talking like that. Why?
We're just looking at the facts of the news flow between hearing from the world's largest company by market cap, Fed Chair Powell, and President Biden, particularly in this environment where we're having such an intense debate about inflation and whether economic growth is really in the low sixes, as consensus states that it is, or really more like 8%. And whether the Fed will have to react to that. And of course, we're going to hear that we're going to have more spending and higher taxes tonight from President Biden.
Julian, you have participated like no one in this market. State the bull case right now. State the case on this most important day of 2021, why I should acquire shares this morning.
The bull case is obviously we know that economic and earnings growth continues to power the market ahead. Negative real yields puts people in stocks away from bonds. We don't know how long negative real yields will persist. We do think yields are going to rise, but we don't think it's going to get to a point where it's going to be restrictive for stocks for quite some time. But again, the other thing is the amount of liquidity that's out there. $4 trillion plus in money markets, savings rates near all-time highs. All of these augur well for the continuation of the bull market.
There is a question about inflation, inflationary pressures, and David Bailey was saying we are going to see margin pressures for a lot of companies. Yes, they could pass along some of the costs, but not all of them. Where are you factoring that into your investment thesis?
Well, there's no question, Lisa, that that is something that's building. And for us, what it causes is sort of a drill down into, it's not just at a sector level, it's really a stock by stock level. For example, we've heard a lot of commentary from some of the consumer staples companies this reporting season that they will be able to pass their costs along, or they're planning to. And we take them, at their word in terms of thinking that way. Those are the types of companies we want to own. Pricing power is paramount in this market.
Where do the industrials and the manufacturers in America fit into that story, Julian? Because they might have a tougher time.
That is definitely a mixed bag, very idiosyncratic, John. In fact, part of that is just trying to figure out, with copper at $10,000 on the LME, are you going to be able to see the economic activity, to see the infrastructure build, which is why the wrangling in Washington is so important for the industrial sector.
And of course, a firm rule here at Surveillance, when the LME is directed, we always go to Mr. Farrell for the follow-up question.
Thanks for that, Tom. I really appreciate that. But the follow-up question's not on the London Metal Exchange. It's about the 1970s. Every time I mention that decade, Julian, we get hate mail. It's real. Tom said it a million times. Julian, do you really think there's a 1970s parallel here?
There could be, and it's one of those things where we would like policymakers to realize the potential for it. Okay, I think part of the healthy aspect of the debate going on in Washington right now is that there is an element of both Democrats and Republicans that think that the spending proposals may be a tad too aggressive and that we have to do it in a more reasoned way. But again, the countervailing point to that is if we start raising taxes, that itself is also a self-fulfilling prophecy in an environment where corn prices are through the roof, lumber, plastics, avocados, you name it.
Avocados, that has been a big concern for Tom Keene and the entire Keene household. There is a question about what type of tax hikes have been already priced into equities. Julian, do you see it at all?
We feel that there is an element of the corporate tax rate rising, probably to the mid-20s. We don't think that capital gains taxes are fully priced. And frankly, when we look at it, we're getting defensive on large cap tech in here as a tactical trade, simply because those are where the majority of capital gains lie looking out the last 4 years. And I think it's a reason why you're seeing these selected reactions post earnings.